Gentlemen, welcome back. You're back with MGTOW Money. Today's topic is going to be how I presume it was a man, how he made over 200 million USD in a month on his investment. And yes, that was just last month, the month of June in 2017. Before we get to that though, real quick, if you're new to this channel, this of course is MGTOW Money. This is the only MGTOW channel dedicated to how you can make money, how you can invest it more wisely, spend it more optimally, and maybe, just maybe, retire early. Let's roll on to today's topic. I'm going to include a link to a Bloomberg article, Bloomberg Magazine and Bloomberg.com, an article regarding a gentleman who was invested in Ethereum, and he made over $200 million. I presume it was at Ethereum's peak, where his initial investment went from $55 million to over $280 million last month. In other words, he gained, gentlemen, over 400% on his money. Yes, that is an extraordinary gain. Yes, that is something that every single one of us is looking for. And I'm sure based upon some of the comments, some of you are desperately looking for it. Now, there was a couple of things that came out of the article, as well as from my own experience, my own observations, etc., that I think that we can learn from this and that I wanted to share with you. For those of you who do want those types of extraordinary gains, let me provide a couple of ingredients. However, before I provide the recipe to find those 100% of gains, let me provide a caution. Of course, with any sort of extraordinary gain like this gentleman, this person who put up this $55 million, as he alleges, was taking extraordinary, and I can't emphasize that enough, unusually extraordinary risk. It is extremely risky when you're putting your money into any type of asset and looking for these types of gains, that it's extremely likely that you're going to lose everything. If nothing else, you're probably going to lose most of your money. And so, needless to say, be extremely, extremely careful. You do not want to join the I Blew Up Club, as I referenced a few videos ago. That is not a club, gentlemen, you want to join. Now, from my own experience and others, 20% of your investments over your investing lifetime, 20% of your investments will generate 80% of your returns. So in other words, you will have a few investments that will turn out extremely well. And it might be very unusual. You might not even thought, man, I had no idea how that was going to work out. And that's typically how it does work out. You buy something and it ends up 300 or 400%. It's not something you're doing necessarily consciously. Frankly, a lot of it is luck, and as the Romans would say, fortuna has come into play. Needless to say, you can make these type of extraordinary gains. And here's a couple of things that I've noticed that this gentleman did and what I've seen. Most commonly, the most common asset classes, the most common asset types that I see are highly liquid assets that you're able to get these types of gains in. Now, I'm talking about, for example, I'm talking about stocks. I'm not talking about buying ExxonMobil. I'm not talking about buying McDonald's. I'm talking about buying, for example, penny stocks. I mean, literally, stocks that are trading at pennies a share. Gold miners are an example of this. Junior gold mining stocks are an example of this. IPO stocks, in other words, initial public offerings, when a stock is first offered to the general public. Sometimes, this was especially true back in the late 90s and early 2000s, but we've seen a few occasions of this more recently, where IPOs can provide extraordinary returns in extraordinary short time frames. However, admittedly, I will make this clear. Of course, some of these IPOs, especially recently, look at Blue Apron, for example, if you want one, they can go the other way and you can end up losing money. So I can't emphasize enough how risky this is. Forex trading. In other words, when I'm talking about Forex trading, I'm talking about foreign exchange trading. You know, when you hear about the dollar yen, dollar euro, you might hear about the euro yen. You might hear about the Aussie dollar, Aussie dollar USD. That's when we're talking about foreign exchange trading. That typically, 98% of the time, involves lots of leverage, high leverage, where you're borrowing. Again, extraordinary gains can be made, extraordinary losses can be made. You can, of course, make 2, 3, 4, 500% on your money in a very, very short period of time. Futures trading, whether that be in agricultural commodities, whether that be in base metals, whether that be in precious metals. Again, you can make extreme gains. Again, you're using leverage. Of course, as this article points out, another example that we're seeing today are extreme gains, extraordinary gains, hundreds of percent gains made in cryptocurrencies. But we're correspondingly seeing, and evidently, as I saw some comments here, we're starting to see some losses come, not surprisingly, in those same classes, in those same asset classes. Some asset classes that typically do not see extraordinary gains are real estate, art, some sort of relatively illiquid market. Now, I am not denigrating any asset class. I'm not saying don't invest in real estate. I am not saying don't invest in art or antiques or guns or some alternative asset class. I'm just making a statement of fact. You typically do not see extraordinary short-term gains in those particular asset classes. They definitely have a place in your portfolio. Again, this is all about making hundreds of percent of your money in a very, very short period of time. It is possible. However, correspondingly, I cannot emphasize enough, you can lose it all. A second ingredient, besides the asset class that I've seen, that typically does, an indicator at least, of making those types of extraordinary gains is the timing of it. Specifically what I'm talking about when you're investing in one of these sort of these highly risky, highly speculative type things, you've got to do so when the price of it is very, very, and I can't emphasize that enough, very, very low. A few examples, of course, from my own experience. Back in, I think it was about September 2001, gold was trading at $250 an ounce. Approximately 10 years later, gold was trading at nearly $1,900 an ounce. So from $250 to $1,900 in a 10-year period, I would say that was an extraordinary gain. Of course, for those people 7-8 years ago who were smart enough to be buying Bitcoin, for example, for pennies, if not, I can remember Bitcoin. I remember this distinctly. I think it was around $200, $250 or something per Bitcoin, and I just ignored it. I just thought, well, what is this Bitcoin thing? I don't have any interest in this. Even though people were talking about it at the time, I just could not wrap my head around what the big deal was and why anybody would want to invest in it. Needless to say, I was wrong. And so again, this gets back to the timing of it. So the point being, whether the timing being something has been beaten down in price, in this case gold back in 2001, which gets beaten down to $250 an ounce, and silver, by the way, was trading at around $4 or $5 an ounce. It ran to about $50 an ounce 10 years later. So again, a pretty extraordinary gain, I think you would agree. Or you get in something that's new, whether it be a cryptocurrency, whether it be an IPO. Again, timing. I can't emphasize that enough. In certain asset classes can engender, not guarantee, but can offer these types of extraordinary gains. Now, let's briefly summarize what you're looking for, what you should be considering if you're looking for these types of extraordinary gains. If you're looking for grand slam gains, you're going to consider certain asset classes of stocks, things that have leverage. I already mentioned Forex, futures, possibly maybe some new crypto, these ICOs, initial coin offerings. Again, I cannot emphasize you can lose all your money. And again, I cannot emphasize enough that the timing of these things is critical. Just because something has gone down in price 80%, 90% does not mean it can't go down another 80% or 90%. And unfortunately, I'm speaking from my own direct experience about that. So again, my point being, you can lose money in these types of investments, these highly risky speculative types of investments. I do not recommend, I highly discourage anyone putting more than maybe 10, 20% maximum. absolute maximum of your investment portfolio in some sort of risky investment, in some sort of highly speculative investment. I'm going to assume this gentleman who went from 55 million to 280 million plus on his Ethereum trade, I'm going to hope that this gentleman had extraordinary wealth. And I'm talking about someone who is a half a billionaire, if not even a billionaire. And if this would have went to zero or went much lower as it's done now, it probably didn't affect him very much. I'm going to presume that was the case. Thank you all, gentlemen, of course, for listening. And if you found this video helpful, I hope you will share it with friends as well as post it on forums. If you haven't already, I want you to hit the subscribe button now, because we, of course, are building an international MGTOW army of financially independent men. With the next video, we'll continue on with more investments and more ways that you can make money, save money, and spend it more optimally. As always, John Galt, out.